Hello everyone, welcome to Run Coaching Institute. அனைவருக்கும் வணக்கம். Before we move on to the topic, kindly like, share, follow and repost for more banking tips and financial knowledge. So this is with the continuation of our previous topic, types of account and nomination part 2. We had earlier learnt about CASA ratio, so we start with inactive and dormant account. So when does an account become inactive? When a savings account or current account, there is no transaction done for more than 12 months, then it is classified as inactive account. And if you don't do any transactions for a bank for 24 months, then it is classified as dormant account. Such deposits unclaimed for more than 10 years are transferred to RBI. Now RBI will use this amount for DEF account. So DEF scheme is Depositors Education Awareness Fund, which is shortly called as DEF. Then we move on to fixed deposit. Account can be operated for a tenure ranging from 7 days to 10 years. So any deposit more than 2 crores comes under bulk deposit, and interest rate may vary further. Interest will be paid at a contracted rate for the agreed period. Loan facility is available up to 90% of the outstanding and accrued interest. Moreover, TDS, tax deduction at source, will be ensured by the bank if the interest income is more than 40,000 in a financial year or 50,000 in case of senior citizen. Now, if you put a fixed deposit for 5 lakhs for 5 years, you need money after 1 year, then you have two options. One, you can close your fixed deposit by paying penalty, and the second option is taking a loan up to 90% of your deposit. Once the tax deducted, the bank will give you Form 16A to the depositor to show in their IT returns. And if the depositor does not come under the tax bracket of income tax purview, then he can deposit Form number 15G or 15H for senior citizen. Now it is called as Form 121. So deposits, there are two types of deposits. One, you have standard fixed deposit account, and another is the cumulative fixed deposit account. So in standard fixed deposit account, interest will be paid once in 3 months, 6 months and 12 months. And at the end of the agreed period, you will get only your principal. In cumulative fixed deposit, interest will be accumulated till the maturity period, and you will get interest or principal after the maturity period. Interest rates should not be based on quantum of money, but they should be based on the tenure only. Next, we move on to recurring deposit. Recurring deposit is similar like fixed deposit, monthly deposit with the bank for an agreed period. Interest is credited on the accumulated balance at regular intervals. These are designed to induce small savers to save regularly. So these deposits can be opened for 6 months to 10 years. Then, as I mentioned earlier, bulk deposit of rupees 2 crore and above constitute bulk deposit. Interest rates vary on the quantum of deposit. High interest rates, so the cost of the funds is high. Normally, these deposits are obtained from high net worth individuals. Nomination facility. This is a very important part in banking. So banking companies nomination rules permit banks to pay dues to nominee in the event of death of the depositor without asking for succession certificate, without verifying claims of the legal heirs. Nomination facility is normally available for savings, fixed and recurring deposit accounts. For current account deposit, it is also available now. It is advisable to record nominee for any banking transaction. Nominee means a person who is proposed or formally enters as the recipient of a grant or an award. So that's it for today. Thank you.